Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Here's our Bitcoin chart. I'm on the 4-hour, and we got that continuation, been moving up and basically finding support on this slope line here. We started to slightly break down from it, but we were forming this ascending triangle. With the resistance coming in at the purple 618 Fibonacci retracement. We finally consolidated long enough, held support on our diagonal uptrend line, and then we were able to get the break. If you use the shared charts, you'll see that I had plotted out that triangle and put the measured move in place as well. We got the measured move up, but we fell actually just like really slightly short of our target. We made it up to 97.46, which is basically like the bottom area of the target zone. But what we're really paying attention to was on the first drive here, you'll see we put in this hump on the TJD TDMACD. Second drive, we put in another hump higher substantially and a larger drive, second drive. And then the third drive here, we got the push up and we came much higher as we broke through the resistance. But now on the oscillator, you'll see we developed the divergence, or the indicator rather. And then same thing again right here. You'll see these three drives correspond as well. Here was our first one, second one, third one, or I'm sorry, first one, second one, and then that was our third one. So we had the big one, then we had another even bigger one, then the third one. We just crossed over, just got this. And now you'll see we were forming this uptrending channel basically on the blue and purple. And I know this isn't really clear when you look at this right here, but you could see it was like working perfectly on the blue and purple. And then essentially we got the move up from the second one, and then the third one we came down right here and got the move up. And like I said, this would have had to come all the way back up here to not develop a divergence. Once it put in the new high, it would have had to come up higher than this previous point. So and at this point in time, that does not look very likely. It looks more likely that we would come down here and either retrace this 5-wave structure and see where that leaves us at, or basically that was the retracement and we failed to break above this same resistance line again. So but I just wanted to do a quick update, as I am expecting, that's a very common theme in crypto and Bitcoin in general, is like the three drives develop divergence on the third drive, sometimes on the second and the third drive, and then you get like your sell-off. So just keep an eye out for that, and we'll see what happens over the next few hours. But with that midnight candle close and that divergence coming off the buy signal at the top of the range, like just shy of the target, I would expect at least a retracement of this structure right here, and then continuation. If not, that was the retracement of our downtrend, and now we'll just get continuation in the predominant trend to the downside. So, and you'll notice that a lot of the altcoins have been breaking out, and the market's getting extremely bullish again. The traditional market's the same way. People are getting extremely bullish, buying up companies that are literally like filing for bankruptcy the same day. So once again, the melt up, over exuberance, like all this stuff is very reminiscent of every single market top I've ever seen, in all my time doing TA and paying attention to the markets over the last like 30, almost 40 years, just watching these trends play out over and over again and these bubbles burst. And that's exactly what it looks like right now. And typically, you see I use typically technical analysis and much less fundamentals on this channel. But in this case, we look for divergences in the technicals, like between the oscillators, indicators, and price action. Well, right now what we're seeing is a divergence between the fundamentals, where essentially you see like, a company's stock going up and yet it's bankrupt or whatever. Like that's just a divergence in the fundamentals. And a lot of times that can be caused by things like news or over exuberance or FOMO or whatever it is, but it tends to happen at market tops or market bottoms. You see those divergences develop. So that's what I'm paying attention to. And once again, I just want to make my point that, you can't just expect these massive reversals and trend changes and things like that to like play out overnight. Um, a lot of people have already like switched around and thought like, oh, the depression or recession or whatever is over, like, right? And it's like, it just doesn't work like that. Typically, these things last for like years. The effects last for like decades. Um, so this is like the dead cat bounce, in my opinion, of like the whole economy, or like the world economy, essentially. So, and I hate being like overly bearish all the time. Um, it is very easy to make money in bull markets and long trending trades, and it's easier to grow in general when everything's just going up and it's easy. But that's just not the case right now, and this is the most important time because this is like the biggest time of transfer of wealth we'll probably ever see in our lifetime, or most of us will have seen or will see in our lifetimes. Um, and as like all this stimulus money gets pumped out and everything, the greed of human nature is going to, basically like try to figure out how they can get a hold of as much of that as possible. So as the economy and as the stock market and all this stuff continues to like float around, and all this money's being printed up before like the hard times hit, and before the actual like hard real like tough times crash hits, you got to figure that the smart money and all these people are going to try as hard as they can to get a hold of as much of that money as possible, like the last ditch effort, last money grab. Same thing we're seeing from the politicians before the bubble pops. So, well, there you have it, guys. And I feel like that's what's happening, in a lot of these markets, traditional markets, crypto markets, all these things. Like, just remember that a lot of these cryptos that people are getting really, really bullish on are literally just putting in another lower high and failing to break above like previous highs. So essentially, just confirming a continued downtrend. And most of them are still down like 90% plus from their all-time highs. So be very careful. And as far as like long and the strongest and short and the weakest, you have to be very careful with stuff like Tesla and Chainlink and stuff like that, because when the bubbles do pop, they pop just as hard or harder on those ones, and that's how you end up with those, you know, that's how you end up with those bag holders that hold down like 90% drops and stuff like that. Is the over exuberance and emotional attachment to an asset. So, I'm not saying you have to just like sell everything and get out of the market right now, but just make sure that you are protected, your stop loss in place, you have hedges, like whatever your situation is. You're not risking more than you're willing to lose, etc. So, and I say risking more than you're willing to lose, maybe you don't leverage trade, so you don't think there's any chance you could lose it. But your account could get hacked, your crypto wallet could get stolen, exchange could get shut down. Um, you know, the asset that you're invested in could drop 90%, and you're stuck with a bag for the next 30 years. Like whatever the situation is, think outside the box. Don't think this couldn't happen to me. Think like, what if something crazy does happen? How am I going to protect myself? And that's how you stay ahead of the curve, is by thinking before stuff happens and planning out, hedges or alternatives or safety nets, etc. So, well, there you have it, guys. Crypto trend trader. I'm expecting a sell-off. I might have jumped out a little early at 9,400. We did get a little bit of continuation, but again, this bit of the range here is essentially just like indecision, like floating up, like false breakout zone. So if it's going to be a legitimate breakout, we'll see that clearly over time. And I did actually almost buy back in right here after we got the break, confirmation, continuation. I almost bought back in here, but then this came in so hard that it was just pointless at that point in time, because the risk reward, once again, even for just like a quick little scalp trade, just wasn't there. So But I'm just being straight with you guys. You know, I really wasn't even looking for another trade, but the way this got like basically broke back down and got picked up, and you know, it looked fairly bullish. How everything was playing out right here, and the channel we were developing on the Jewel Thief and everything, or the Bellina Assassina. So, but there you have it, guys. I'm out of here, Crypto Trend Trader, with a quick market update on Bitcoin. Stay safe, protect yourself. It's not financial advice. I'm not your financial advisor. Please do your own research and trade responsibly. Crypto Trend Trader, and I'm out of here.